Welcome in traders. Today we're going to go over today's trading session. We are currently looking at ES. The time frame we are looking at is the 2000 tick chart, and the only supportive indicator I use is the 21 EMA, which is this purple line that is oscillating up and down. And other than that, I solely rely on price action and trend lines to look for high probability setups. Now, the first thing I like to do is during the pre-market session, I like to locate the pre-market lows and the highs. And as you can see, I have this resistance and this support drawn out. Now, during this open, price still hasn't developed. It can be a range, especially that we bounced here and here, but we need a little bit more confirmations before completely saying we're in a range. So we're just going to focus on the short and trends. So as you can see, we have an uptrend working higher that needs a new high. This was right before the open, so we're waiting for the bell. And as you can see, price broke and made a new high with no entries. As you can see, no price action touched the EMA. And for most tradings, or for most of the positions I take, I like to take entries at the EMA after the corrections are over. So here we just had a break, we had a new high. So now we're going to see what the price is going to do. Now, usually when a structure or a trend has a break in a new high, we can either have a consolidation, a reversal, or we can, excuse me, or we can continue trending higher. Now, as you can see, as soon as we broke, we made a new high, we broke out of this resistance. This resistance had a failed breakout. Once that happened, price quickly reversed. So now we're just gonna respect this trend and we're gonna follow the trend line rules. And as you can see, this is one clean leg down. Now, a lot of you might have drawn it a bit tighter like this. Now, if you look at the 5,000 or the 10,000 tick chart, it still looks like one leg down. And when price doesn't even come near the EMA, it's super strong, a series of lower lows and higher lows. This trend is still active. So we are actively now looking for a short position. So what we are going to do is we're going to let the bullish correction play out, and we're going to look for a high probability setup at the EMA. Now, counting from this low, we have a new low, first entry short, pullback, second entry short. This was the second attempt for bulls to try and drive price higher. They failed, and this is the first high probability setup of the day. Now, although we didn't exactly get a new high for this mini uptrend, the main bias is this downtrend needs a new low. We barely broke below EMA, and this attempt is enough. This was the first trade that I took for the day, and now we had a break and a new low. Now, price touched the EMA and made another new low. Can we still look to go short? No, we don't have enough information to support our theory of, or for us to look to widen the trend. And also, let's say we were looking for a wider downtrend. This doesn't really even fit good. We don't have any confirmation here. There's too much space. So just like we did earlier here, we have to let the market digest and wait for the next market cycle. So we had a break, we had a new low, and as you can see, now we have a new uptrend. So I was actually looking for a long position here, but there was no setup, right? We're looking for a second entry long. So let me just draw this correction for you guys. Okay. So we have a new high, first entry long, pullback, second entry long. Now this is actually a hidden second entry long. We triggered below the previous candle and we had a nice close above the EMA. Now this never had a trigger. We only enter price once we have a trigger above our signal bar. We never had a trigger here, and we ended up pushing higher, and we made an attempt to make a new high without any setup at the EMA. This wouldn't even count for a double bar entry for two reasons. One, the first reason is price is stacked in the middle of EMA, and secondly, this bar is horrible. If it was a better bar, maybe closing above EMA, I would have considered. I would have also saw a little support here, and I would have considered taking it. As you can see, we kind of are creating a support. But once this was, a bearish close, we're kind of starting to get stacked. This is where you wait. I was actually waiting for a push higher and a higher low, but as you can see, this was an more than enough as an attempt, because usually if price is going to test it again, it would hold at the EMA, but instead we sliced through it. We retraced this move. Usually you can grab the Fibonacci tool and you can measure. Now, once we retrace that 60%, you can forget about that recent structure. So I'm going to count this as a break and a new high. And we are just going to wait for the next market cycle. Over here, and this is good for learning purposes, once you have one leg down, a significant push up followed by a second leg down, this is a clean two-leg move. Once you see that, you can't really widen it. It doesn't really fit that well, right? This doesn't really fit that well. And this is just whenever you see a two-leg move down like this, forget about looking to go short. This is like the ultimate setup where there is no wider alternative, and it's just best to wait. And as you can see, we kind of did test it, but we barely managed to make a new low. But I personally counted this as two legs down, breaking a new low. Okay, now let me get rid of this so you guys don't get confused. So now we had a break in a new low. Now, this might be confusing for new traders. A lot of you started, or if you're at least intermediate, you would have started drawing it like this, right? You're not going to start drawing the trend line from here because it just doesn't fit, right? So I started drawing it from here, and I had a break and a new high. And same thing how I mentioned earlier, whenever you see these two legs, the market likes to move in pairs of two. You just want to forget about looking for an uptrend unless proven otherwise. And as you can see, just looks like a clean one leg, push below, second leg up. So now we're going to pause unless, price keeps pushing higher. And as you can see, price is pushing higher. So once I saw that, I started looking for an alternative uptrend, something that aligns with the market's geometry. And this was the best fitting pattern for me. As you can see, we have 1, 2, 3 confirmation. Looks good. It's not the cleanest trend up, especially because there's some chop in the middle, but we have to work with what we got. And now I'm looking to take a long setup, right? Because this uptrend needs a new high. So now we're looking for a high setup, or pardon me, a long setup. So we're looking for a second entry long, right? So counting from the recent high, we have a new high. Only first entry long, we pushed lower, and now we close below EMA. Now, this is totally fine. And if, we're not looking at it from hindsight, we're looking at it as the bars are loading. And it also looks like two legs down. So now we're confident in saying, okay, the downtrend played out. Big uptrend needs a new high. So what I was looking for was a push above the EMA and a higher low, something like this above the EMA, but we never had it. Price never pushed back up. We didn't get any reclaim, and we ended up pushing lower and lower. Now, if you zoom out, and I always mention how important the Fibonacci is, and it's super easy to use. You measure counting from that lowest pivot to that high of that uptrend. Once you retrace that 60%, forget about it. We're not looking to go long anymore, and it happens. Sometimes the market likes to alter quickly, pivot quickly, especially recently the market's been pretty volatile. So now we adjust. It's okay. As price action traders, we adjust to the market. We trade what's in front of us, not what we want, right? So if you were looking to draw a trend like this, it doesn't fit well. So much space, and it's just a weird angle. It doesn't take, even if you're a beginner, you would know this is not a right or the correct angle to draw the downtrend. So what I like to, at first I had it drawn like this, and then I had a break and a new low, right? I had downtrend, break, and a new low here. But sometimes the market will slowly adjust and create a new trend, right? This is called a spike in a channel. As you can see, at first we had one leg down, but price is turning into a spike, working lower and lower with a series of lower lows and lower highs. And as you can see, the EMA is not even touched. This is just a strong indicator that the bears are holding price where it is. We didn't even test the EMA, so there's a good chance this downtrend needs a new low. But as you can see here, we had a little bit of a break below this trend line. What does that mean? We don't need the RSI indicator to know that price is being oversold. All we need is our trend lines. And once you see price break below your trend line, right, especially when we're looking for shorts, this is called overshoot, which means it's oversold. Now, usually when something is oversold, it's an indicator, or it's oh, excuse me. Um, it's an indicator that price is going to either have a stronger correction or potential reversal. So we had an uptrend, right? So we need to respect it. Now, whenever we have overshoot, we can't just take a plain second entry short, right? We need a double confirmation. So, or a higher low, right? So counting from this recent low, we have a new low, first entry short, pullback, second entry short, and this is actually a double trap, right? This is the ultimate setup. We have, I think this was actually the cleanest setup of the day. Downtrend needs a new low, right? This uptrend had a break and a clear new high, right? And during this consolidation or correction, we held below the EMA for most of the time. So once that happens, this is an indicator that the bears really are holding this price. Bulls are weak and they really want to test this new low. This was the second setup of the day. Beautiful double trap. Clean setup, closed right below EMA. And it was a nice scalp. I actually entered using a limit order. It's about 7 points. I went for 3.5, which is my target profit, but if you guys wanted more, you could have definitely went. And as you can see, beautiful pure price action. We had a break and a new low here. So if we zoom out, there's not much really going on. I mean, you can't really draw a wider downtrend, and it just seems like quick pivots. So we're just only gonna focus on the short and downtrend, or the short and trends like we've been doing for most of the day. So now we're gonna see what's gonna happen here. We do have a higher low. We had a break, a new low. We have a higher low, but since this downtrend was pretty strong, you would at least need a reversal pattern. So I don't think a higher low is enough for, for us to expect a reversal. You just want more confirmation, especially when price has been trending, lower and lower. So I don't think that was enough, but what I like to do, or what I was waiting for during this, is I wanted to take the safe setup. Was I wanted this uptrend to form, and I was looking for a second entry long at the EMA. We have, counting from this recent high, we have a new high, only first entry long, right? So a first entry long is the first trigger higher than the previous candle. And it was right here. We are looking for a second entry long. That's usually our entries. We never had it. We had a break. We had a new high. Okay. Now we're going to keep looking for entries and just focusing on the short and trends. Now, if you guys drew it tighter like this, and let me get rid of this because I want you guys to really understand what I'm talking about. All right. So if you guys drew it like this before price action fully formed, right, you do have a break in a new low. But if we zoom out, and I always like to mention this, when you zoom out and you see that we're having a series of lower lows, higher lows, all the pivots are lower than each other, and most importantly, the EMA is holding. We haven't even broken above it. This is a very strong indicator that this is one working leg, right? So once I saw this, I adjusted, and over here, we also have overshoot. Same thing like we had here. It's oversold. So what are we looking for? We're looking for either a high or low confirmation of the second entry or a double trap, right? You can't just enter on a second entry alone when there's overshoot, because you just want, the best indicator and the confidence to know that the bulls are gone. There is no reversal. There is no longer correction. And you just want to be on the safe side, right? So we had overshoot. We're going to respect the shortened corrections. We had a break, new high for it. And let's start counting. From this recent low, we have a new low. First entry short, pullback, pardon me, new low, first entry short, pullback, second entry short. I was supposed to put this here. That's why I'm kind of counting it wrong. New low, first entry short, pullback, second entry short. We pushed back up, and this is the double trap. Actually, is it a double trap? No, I'm sorry. It's a lower high confirmation. A double trap has to be higher than the second entry, right? It's basically the highest point. What I liked about this the most, I personally didn't take it because I was up to green trades for the day, so I took it easy. But if you took this, you were 100% in the right. If I wasn't up two trades, I would have taken it. The fact that we have a resistance being established, and most importantly, the fact that this EMA hasn't even been broken above, it's also acting as a resistance. There's so much selling pressure, right? The mini correction had a break, a new high. We skipped the second entry, and you see the importance of skipping the second entry because there is, especially after overshoot, there is a good chance price will retest higher, and it did, and all the bulls got trapped here. And this is a lower high confirmation of this second entry because the second entry is right here, and let's just put it second entry and lower high confirmation, beautiful setup. You would have had to do a bit of a limit order, but it ended up working. And let's say you wanted more, right? Let's say you anticipated price to drop a little more, maybe from like a local support. We put our stop loss a quarter above our signal bar. So this was our signal bar. We put it a quarter above. So it would go somewhere like here, right? It would go somewhere like here, a quarter above. We didn't even come near it. We ended up going a little higher, failing at the EMA again, right? And pushing even lower. So if you ended up, holding out through this, you would have definitely had a nice winning trade. Now we have a bit of a spike in a channel. Over here, I wasn't too confident on looking to go long for two reasons. If we zoom out, we're trending lower and lower throughout the whole day, right? It's not a huge sell-off, but it's definitely enough for you to be careful when you're looking for long positions. I also was looking for an alternative wider channel. There was nothing really that fit, so it's fine. I'm just going to respect the corrections, but I really wasn't looking to go long. And you see how this uptrend, normally we would have anticipated for it to make a new high, but it failed, and it's because price was trending lower throughout the whole day. So the bears really just want to drag this price lower and lower, and the momentum alone is, having control. So I ended up canceling this out, right? Drawing this new downtrend. Now, this downtrend also needs a new low, right? It's still active. We need a new low. Counting from this recent low, we have a new low. First entry short, pullback, second entry short, right here, right? Now, the issue here is, let me zoom in a bit. The issue here is it literally made the scalp already. If you enter here, you're already at the low, and there's a very strong chance that price is going to reverse. You want to have room. My rule of thumb is I want to have at least 3 points from that low. So for instance, this low was 80.75, so we'll put it at 83.75. That's how I time my entries. So around this red horizontal line is where I would like to enter, and I would usually just put like a nice limit order to execute. So at least have 3 points depending on the day room, so that way if it pulls back, you still have room. If it goes lower, you can always set a break even if you think that price is going to reverse. I usually never go break even unless price goes sideways for quite a while, but usually when I enter, I trust in my trades, and whichever ways it goes, I accept it. So here we had a break, we had a new low, and now the market has closed, and I usually don't recommend trading 30 minutes before the close due to volatility. So that was really it for the day. Amazing price action. Last week was a little bit slower, but this week was great. If you missed this trade in the morning, or this trade in the morning, my first trade, you had so many other setups, very clean. There wasn't any fake outs. As long as you drew the trend lines correct and you waited for corrections to play out in high probability setups. And if you're new here, go to my beginners course on my YouTube channel. Just explain how I draw trend lines as well as how I count entries. And I'll see you guys in the next video. Take care.